Welcome, fellow traders. Today, we're going to dive into the fascinating world of trading psychology. As traders, we all know that success in the markets isn't just about having a good strategy or knowing how to read charts. It's also about mastering our own minds. That's right, when it comes to trading, our biggest enemy is often ourselves. Our emotions, impulses, and lack of focus can all lead us astray and cause us to make poor decisions. But fear not, because in this presentation, we're going to explore how you can take control of your mind and become a more disciplined, focused, and successful trader. Emotions can have a significant impact on trading decisions. Fear, greed, and anxiety can all cloud judgment and lead to poor choices. For example, a trader who is afraid of losing money may be hesitant to take risks, even if the potential payoff is high. On the other hand, a trader who is motivated by greed may be more likely to make impulsive decisions that result in losses. Managing emotions effectively is crucial for successful trading. One way to do this is by developing a trading plan that includes specific rules for entering and exiting trades. This can help to reduce the influence of emotions on decision-making. Additionally, practicing mindfulness techniques such as meditation or deep breathing can help traders stay calm and focused during stressful trading situations. Discipline is one of the most important traits a trader can possess. It's what separates successful traders from those who fail to achieve their goals. At its core, discipline means having the ability to stick to your trading plan and remain focused on your long-term objectives. This requires a great deal of self-control and the willingness to make sacrifices in the short term for the sake of long-term success. To be a successful trader, one must master the art of focus. It's not just about concentrating on a single task, but also about being able to maintain that concentration over an extended period of time. One practical tip to improve your focus is to break down your trading tasks into smaller, more manageable chunks. This will help you stay focused and avoid feeling overwhelmed. Another strategy is to eliminate distractions by creating a quiet workspace where you can focus solely on trading. In addition, it's important to take breaks throughout the day to recharge your focus. This can include going for a walk, doing some light exercise, or simply taking a few minutes to meditate. By allowing your mind to rest and recharge, you'll be better equipped to make sound trading decisions when you return to your workstation. Developing self-control is a crucial component of successful trading. It involves managing impulses and staying disciplined, even in the face of uncertainty or temptation. One effective strategy for developing self-control is to establish clear goals and routines. This can help traders stay focused and avoid making impulsive decisions based on emotions or external factors. In conclusion, mastering self-control and focus are crucial for successful trading. Emotions can impact trading decisions, so it's important to manage them effectively. Discipline and focus can help traders stay on track and make better decisions. Developing self-control strategies is key to achieving long-term success in trading. To apply these principles to your own trading practices, start by identifying your emotional triggers and developing strategies to manage them. Stay disciplined and focused by setting clear goals and creating a routine that works for you. Remember, mastering self-control and focus takes time and effort, but the rewards are worth it. Thanks for watching. Like and subscribe and we will catch you on the next one.